Hi everyone, this is Tyler from ORATS, and today we're going to look at over 150,000 backtests that we ran on the wheel strategy. We tested different days to expiration, strike deltas, and spread yield, and measured 37 different performance metrics. You can go to orats.com/backtester to sign up, or continue watching to see the results, and learn how we at ORATS use the new options backtester to find the best wheel strategy trades. First, let's go over what the wheel strategy is. The wheel strategy is a premium generating strategy that sells both short puts and covered calls. It's different from normal strategies like vertical spreads because it involves two separate trades. The first trade is a short put. You continue to sell the short put until you get assigned the stock, at which point you start selling covered calls. This continues until at some point the stock gets called away, which is when you start the strategy all over again. A few questions start to pop into mind. How far out should I sell the puts and calls, and at which deltas? Should I go for higher premiums, but with a greater risk of getting assigned? We answered all of these questions by backtesting thousands of combinations of days to expiration, strike deltas, and spread yield. We put the results in a table, which you can filter based on your investment objective. Some strategies have a higher return, but higher risk, while other strategies perform better in bull markets, but aren't as good in bear markets. Looking at the table of wheel backtests for SPY, we see over 80,000 results. We can choose to rank these based on certain performance metrics, or by choosing one of three custom rankings. The best return on risk is my favorite, because it weighs the percent profit per day against the worst monthly and annual return, as well as the max drawdown. Zooming back out to the table, let's go over the different entry criteria we tested. We tested as short as 2 days to expiration and as long as 111 days to expiration. In our wheel backtest, we defined the first leg as the short put and the second leg as the call. So for this first ranked trade, we're testing 16 days to expiration for the short put and 2 days to expiration for the covered call. For both the put and call, we're entering at the 2 delta strike. Now 2 deltas is really low. So let's filter to a minimum of 10 deltas for both the put and the call side. I like the third one down, so let's click on it to see more details. The details pop-up includes a graph of performance, a summary of performance metrics, a table of monthly returns, and a detailed trade log. We can set how much of our starting capital we want to invest in the strategy to see how much we would have made. I like this particular strategy because the max drawdown percent was only -13 and the worst annual return was only -4%. Diving into the monthly returns, we can see this was attributed to a bad December 2018, which was a pretty bad month for the market as a whole. It looks like the strategy did a good job at avoiding the market crash in 2008. Let's look at the trade log to see what happened then. If we jump to 2008, you can see that it was selling puts consistently until it didn't trade for about 9 months. When a strategy doesn't trade, it's usually because the entry criteria limit the option scan results. In this case, we are targeting a high spread over stock percent, otherwise known as spread yield, which is a measure of how much premium we are receiving relative to the stock. Since the prices of short puts are negative, the strategy only trades if the price is relatively low. That is why the test avoided parts of 2008 when prices were high. To see how the same strategy would have performed with a different spread yield, we can use the Find Similar Backtest feature. This works by selecting which of the entry criteria you want to hold constant, and then it will apply those filters to the table. In this case, we want to see a different spread yield, so we would hold everything else constant. This shows us 4 backtests, each testing a different spread yield. As expected, the backtest with no spread yield criteria was in the market 100% of the time, and therefore experienced more negative returns. The Find Similar feature can also be used to test against overfitting. If a particular strategy has surprising returns, you can find similar backtests and vary the entry criteria to determine what exactly was contributing to the results. Going back to the strategy that I liked, I can save it by clicking Save to My Favorites and then also scan for the short put options. This will take me straight to the options scanner, applying the respective symbol, strategy, and entry criteria to the scan. From here, I can browse the trades I like and start trading the wheel strategy in paper or through one of ORAT's supported brokers. That's it for this video. If you have any questions about the wheel strategy or our new backtest finder, please leave a comment below or email support@orats.com.